Hi folks, Lee Gettess here with the Market Sense for the week of June 3rd, 2014. We're going to look at charts that come from the Trade Navigator software. And the first chart we're looking at is bonds on a weekly basis. And you can see they've finally turned down for the first time in quite some time. In fact, going down to this lower moving average here is the most weakness we've seen since way back here the first week in April. I really thought they would probably hold in the 136.16 area here at the middle, but they've come down here. Now the question is, are they going to hold here? This is, let's call it 135.08. If they do not hold here, and I think you have to give them the benefit of the doubt considering they've been strong all year, if they don't hold here, the real critical point will be this previous swing low here. If they break down below that, and that's actually 134.14, so let's say if they go below 134.12, that'll start to look like maybe there's a problem here, like the trend is essentially over with. At this point, they're showing some weakness, and again, more than we've seen in a while, but the trend is still solidly up, and there's no reason to panic about anything. I think we still have to believe they're going up. So again, on 135.08, that's clearly the critical area here, and the resistance is up here at 137.20, but there's so many reports due out this week. They could be up challenging this swing high, the previous high last week at 138.12, and who knows. But they certainly are showing weakness up at this point. We'll have to keep an eye on that, but they haven't convinced me that they're turning weak just yet. A break of 134.12 would do that. Now in stocks have done precious little. We have the support here is, let's call that 1907. And the resistance here is about 1928.5. So how do you like that? Weekly support and resistance are barely more than 20 points apart, and they haven't traded either of them. That's how exciting they are. I cannot tell you how unusual it is to have a market at new all-time highs and have so little volatility. There's just no interest in the market, it seems. Now, what we can assume, we could talk about other levels of support and resistance, but what I really believe is they're either not going to do anything this week or they're going to just bust through everything and take off in one way or the other. This is the first week of the month, which is just loaded full of employment data, culminating with the monthly employment report on Friday. I think there may be actually a little more focus on the ECB on Thursday. That's a little difficult for us because it's not a completely time-scheduled report. We don't know exactly when we'll hear what we'll hear from them, but it looks like there's a lot of focus on what the ECB is going to do with their interest rates and their forward guidance and all, and that seems to be what's really got everybody's attention here. Of course, we do have all of our employment data starting with, I think Challenger comes out Wednesday, so Wednesday, Thursday, Friday is just chock full of stuff to pay attention to, and I really think that 1928, 1907, one or the other of those ought to get absolutely slaughtered this week. I have no clue which one, other than to say, well, the trend's still up, right? They haven't broken anything. Trend's still up, but they could break either way on the news, and we've just got to watch and see what they do. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to listen to our thoughts.